Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be covering some massive news from a company that we've talked about on the channel before, Eat Well Group. I'm super excited to talk about this today. I think it's a major game changer for this company. Before we get into it here, please take a second, hit the like button, you guys. It's a huge help to both myself and the channel. If you're not already subscribed, McNallie Money, feel free to do so. And let me know in the comment section below what you think of this news and if you're currently holding shares of Eat Well Group. Without further ado, let's get into today's video. Okay guys, so that's right. For today's video, we're going to be talking about some huge news from Eat Well Investment Group. This is a company that's really becoming a mainstay on the channel, you guys. This is what I'm personally invested in. I'm super excited about their future business prospects. It really is one of the most affordable ways to play the plant-based protein sector or space. In addition to some of my other holdings that I have in this sector, I think Eat Well Group is a great complement to that portfolio. So first things first, I wanted to take a look at the chart. You can see Eat Well Group trades under the ticker symbol EWG here in Canada. We're going to talk about their listing in the US and Frankfurt as well in this video. But on the Canadian side of things, this is as of close on Wednesday, October 27th. They were up 2 cents on the day, which equates to just about 2.5% to close out at 87 cents Canadian. Now, if we pull up a 6-month chart here, you guys, you can see they did have a dip. They dropped all the way down to 68 cents to close out on October 20th. Since then, they've had a nice little run. They're up about 20 cents per share, but they still are off those highs we saw back at the start of September when they were getting close to the $1.10, $1.20 type of price point. So I think this is still a great buying opportunity. You can see the market cap on this one, you guys, under $100 million Canadian, so super small cap company and a great place to get in at the ground floor for what I consider to be a very exciting up and coming business in the plant-based protein space. And as we're going to talk about later in this video, also now the consumer packaged goods sector. Now for those of you in the US, you can see they also trade on the OTC under the ticker symbol EWGFF, right around the 71-cent US price point. And I've also actually been receiving a number of questions from those of you located outside of North America. So you are able to purchase shares of Eat Well Group on the Frankfurt exchange as well. So I wanted to bring up that listing, you guys. If you are located in Europe, or maybe you don't have access to the North American exchanges, this is definitely an option if you're looking to get involved with this company. And the ticker on the Frankfurt exchange is 6BC0.F. Now, for those of you who aren't familiar with Eat Well Group, this was formerly known as Rock Shield Capital. We've done a couple of videos on this company on the channel, so I'd encourage you to go take a look and watch some of those former updates if you're looking for a deep dive on this company's business model. But essentially what they are is an investment or venture capital firm that are looking to build a portfolio of companies involved in these 3 areas of the market. So the 3 pillars or divisions are agribusiness, food tech or food technology, and consumer goods or CPG. And the 3rd pillar is really what we're going to focus on in today's video or presentation, as the news is really related to a big acquisition that Eat Well Group has made in the CPG space. But I did want to spend a second and talk about the other divisions of this company because they are equally important and they really do complete the seed to market chain that Eat Well Group is trying to go after. Now, the agribusiness is really focused around the farms, extrusion, fractionation, pulse processing, and the genetics of the core ingredients that are going into these products and these foods. And the acquisition of Bell Pulses, which we've talked about on the channel previously, was really the foot in the door or Eat Well Group's entrance into this space. So Bell Pulses was an existing player in this space. They're forecasting annualized revenue for this division alone at $60 million this year. So super well-established business, you guys. So Bell Pulses is one of the largest processors of plant-based ingredients in Canada. They've been around for 40 years. And they've already got customers in over 35 countries across the world. So very well-established brand here, you guys. Based on their current production rates, Bell produces nearly 100,000 tons of fully traceable seed or product each year, which results in 26,000 tons of pure plant protein. And this plant protein is then taken and used as the foundation of a variety of different products and goods, which range from plant-based burgers, plant-based chicken nuggets, pastas, crackers, and a variety of other consumer packaged goods. Now the food tech division here, you guys, is really focused on R&D, creating patents, proprietary formulation, and intellectual property. And this is really focused on their acquisition of Sapientia Technologies. So this again was an existing company. They have a long track record of innovation in the food tech space, along with a very well established and experienced management team that knows their way around this industry. Now Sapientia is an industry leading food tech company focused on high nutrition, great tasting plant-based foods, and they've got a special focus on creating culinary driven snacks or the snack food space with plant-based protein and cleaner, more healthy ingredients compared to some of their competitors. Now the third pillar here, the consumer goods, is really what we're going to talk about in today's presentation. So you can see here, hot off the press at 5 a.m. this morning, Eatwell Group to acquire a majority stake in a plant-based baby food company named Amara. And if you scroll down in the article, you can see their initial investment is going to represent a 51% equity ownership in this company. So this company is known as Pata Foods, but they're doing business, or DBA, as Amara Organic Foods. They're based in the United States, and they're really focused on the baby or infant food space. And what's so exciting about this, you guys, as we're going to see further down in the article, they've got a very well-established distribution network and a strong foothold in the consumer packaged goods space. So this really complements the other two pillars of Eatwell Group and completes that holistic plan that they have to bring products from seed to table for consumers or customers. And that's exactly what the president of Eatwell Group, Mark Aneed, talks about in his comments here. So Amara represents an integral component of Eatwell Group's strategic business plan, bolstering the company's complete vertical integration strategy, which we just mentioned, by focusing on top tier and proven CPG products that consumers already know and love. Amara's focus on improving infant nutrition through innovative organic products will help establish Eatwell Group as a leader in the plant-based CPG products and offering space. Now in terms of Amara, we're going to look at their website in a second here, but they're a food technology company that uses science and proprietary intellectual property that locks in taste and texture to make healthy, organic, non-GMO, plant-based, and convenient baby and children's food possible for modern day families. Amara is driven by the belief that setting kids on the right path from a young age will help them live better, feel better, and think better for the rest of their lives. And as a new parent, you guys, I couldn't agree more. I think this is a great philosophy and core belief that a lot of parents can get behind. Amara first disrupted the baby food market back in 2017, which was really supporting demand from parents for fresh, nutrient-rich, and low-sugar baby foods that had minimal processing but were still shelf-stable. So you can see how well this acquisition lines up with the philosophy or core beliefs from the Eatwell Group themselves, along with the mission to really become one of the major players in this CPG space. Now what's even more exciting for me, you guys, as an investor in Eatwell Group, Amara already has a super strong distribution network or presence across North America. They're sold in Whole Foods, Costco, Amazon, and Walmart Canada. So I'm very excited to try some of these products out for myself. And in terms of the strategic rationale for this acquisition, we talked about a number of these points already. It completes the initial phase of Eatwell Group's integration strategy. They're an award-winning CPG brand, so it really fills out that CPG pillar or bucket that they were looking for. The robust distribution network, which we just talked about. Amara was also voted the #1 best baby food brand by Good Housekeeping, so they're very well recognized, you guys, and already a strong brand with a strong market presence. And a big reason for that is because they've really differentiated themselves from some of the other competitors in the baby or infant food space. Now the list just continues to go on here, you guys. So in terms of TAM, or total addressable market, the baby food CPG category is projected to reach just about $100 billion by 2027 and has a compound annual growth rate of 6% for the next 6 years. So super exciting industry to be a part of. Obviously, they've got a lot of synergies that are going to drive additional margins with their existing business units. 14 SKUs that are already in market and are now immediately added to Eat Well Group's portfolio. And the final point here, you guys, which you know I'm a huge fan of, Amara is led by the founder of the company, Jessica Sturzeninger. So that's a big one for me, you guys. For any of you who've watched the channel for some time, you know that I love businesses that are founder-led. And in terms of the details behind this investment, I'm also very excited to see the structure of this deal. So the initial phase or component of this investment is $11.6 million US, and that's what's actually buying them this 51% equity ownership in Amara. Now, the important thing here, you guys, is that investment or that money is actually going to be used as working capital for Amara in years to come. So it's a great deal for Eat Well Group because it really does bolster the strength of the company that they're investing in. Now, $1 million of this is going to be paid upfront upon closing, and the additional $10.6 million US is actually going to be on a payment schedule over the next 24 months or 2 years, where Eat Well Group is going to pay $1.3 million per quarter for the next 24 months. Now, once that initial term is complete, if Eat Well Group wants, they can actually exercise the option to buy an additional 29% of Amara, so this would bring them up to 80% ownership in the company at a valuation of $100 million. So that really speaks to the growth that the leadership team at both Amara and Eat Well Group feel is possible over the next couple of years for this company. So overall here, you guys, I could not be more excited about this deal. I think it's the last or missing piece in Eat Well Group's strategy. I think the structure of the deal is phenomenal, and I think there's a ton of synergies that are really going to catapult this company to the next level here as they start to integrate this business into the overall organization. Now, I did want to quickly jump over to the Amara website so you guys can get a look and feel for the products. As you can see, the landing page, tagline, first bites done right. If you scroll down a little bit here, you can see some of the featured products. So very clean and inviting packaging. If we jump over to the About Us section, you can see the vision statement from day one has been Eat Well, which is super ironic here, you guys, that that's the name of the company making this investment. Eat well, think well, be well. We decided we would create the best, tastiest, healthiest food on the market to support a lifetime of healthy eating. So I would highly encourage anyone who's invested in Eat Well Group or thinking about this as a potential investment to take a look at the Amara website. A lot of information here, you guys. You're actually able to shop right from the website, and obviously it's great to try out products when you're invested in a company like this. Now, the final thing I wanted to bring your attention to on their website is really some of the ways that they've differentiated themselves from the competitors in this space. So you can see a few of the points they call out: 100% whole ingredients, really focusing on locking in that taste and texture. They use 12 times less plastic, so very environmentally friendly packaging. The processing itself is really taken to the next level here. And most importantly, again, as a parent here, you guys, no additives, preservatives, or sugary fruit concentrates. And again, that's exactly what you see front and center on the landing page. 0 sugar added, 1,000+ reviews from satisfied customers, plant-based, 100% organic, nutrient-dense meals and snacks. So again, perfectly aligned with the focus of Eat Well Group. So to close things out here, you guys, I wanted to jump over to the updated investor presentation on the Eat Well Group website. I think this is a very fitting slide to close out today's video, as it shows an updated view of really what you're getting when you invest in Eat Well Group. So you can see the 3 different divisions as we talked about in the intro. The seed division or agribusiness, which is really centered around that Bell Pulses acquisition. They've got the food tech or science division in the center there, which is really focused around that Sapientia technology acquisition. And then the market division or CPG, consumer packaged goods, which has now a number of different banners within it: Amara, Sapientia, and the actual Eat Well banner itself. So you now really are getting that full vertical integration here, you guys. You can see a very well diversified business, multiple different revenue streams, and an extremely attractive valuation compared to any of the other operators in this space. So for those reasons, I'm super optimistic about Eat Well Group's future. I'm very excited to be an investor in this company and continue to add to my investment or position in this stock. And I personally believe today's news will be very well received by the investment community, as it really does complete that initial phase of acquisitions that the management team has been referring to. So that's it for today's video, you guys. Thanks so much for watching. Feel free to leave a comment in the section below. Let me know if you're holding shares of Eat Well Group, what you think of today's news, and how you think this company stacks up to some of the other players in this space. If you're not already subscribed to the channel, McNallie Money, feel free to do so. If you're still watching at this point, hopefully you found some value, so make sure you hit the like button on your way out. That's all for now. Thanks so much for watching, and have a great rest of your day.